Ladies and gentlemen, welcome back to another segment of Your Money with MRC. I am your host, Hector Guizar. Today's topic is permanent life insurance. Today, guys, I had a phone call from a caller last week. Wanted to know the difference between term insurance and permanent life insurance. In our other segment, we covered what was term insurance. This segment, we're going to cover what is permanent life insurance. Let's get straight into it, guys. Permanent life insurance is exactly what it says. It's life insurance that is permanent. It's good until you expire, okay? Usually good to about 120 years of age. There are a few different types of permanent coverages we'll discuss later in the segment. Permanent life insurance may act as a supplemental savings plan, a supplemental retirement plan, and most permanent coverages now include living benefits, something that we also covered in our last segment with term insurance, guys. What are the benefits of having permanent coverage? Well, let's get to it. Coverage is always going to be there for your family when your family needs it the most. It's level insurance, so what that means is that the cost is fixed. It's going to be fixed for the term of the contract. It's not going to go up, go down. It's not going to terminate like a term contract does. Once you guys find a policy that fits your budget, it will be the same price every single month until the end of the contract. With permanent life insurance, the money that grows in the cash value has potential stock market gains. You could borrow money from the policy once cash starts accumulating. Your money will actually still accumulate even when you borrow money from the policy, not like a 401k where you actually have to pay back the money that you borrow. And again, because it is life insurance, ladies and gentlemen, the money that is transferred to your beneficiaries is tax-free. Very important to know. And of course, there are some downsides, okay? With any pros, there's always cons. Permanent life insurance is going to be more expensive than term insurance. If this does not fit in your budget, you may want to start off with some term coverage and convert that term coverage into permanent coverage later down the line. One of the downsides is that you have to qualify with a medical exam. Blood, urine, depending on the coverage, you may also have to do an EKG. If you fail to make monthly payments on your policy, it will lapse. And any cash value that is in the policy will now become taxable income, just like how your 401ks work. Now, what's different here at MRC? What does MRC offer? Well, we offer permanent coverage with one of our A-rated carriers, permanent life insurance with living benefits. That is our biggest niche here at MRC, is living benefits for term insurance and with permanent insurance. Our costs are very competitive with other carriers. And if you do not get sick, our permanent coverage have a lifetime income rider. What is a lifetime income rider? Well, let's just say you're putting $100, $20 into this policy every single month. You do not get sick. You do not activate any of the ABRs, the accelerated benefit riders. You don't activate your terminal, your chronic, or your critical. And the money that's built in the cash value, now you could turn on the income at, say, 65 or even 70 and start drawing a tax-free retirement income from your policy until the age of 120. Yes, ladies and gentlemen, this is income that you will not outlive. Okay? This is another vehicle to add on to your portfolio with your retirement investments. Our 401k, if you guys Google it, go to, you can Bing it, do what you need to do, but the average income from a 401k lasts about 8 years. With this permanent life coverage that we offer at MRC, and if you do not get sick, we can give you retirement income for the rest of your life after it is turned on at a certain age. So let's talk about living benefits a little bit. If you missed our segment on term insurance, what is critical illness? Critical illness is a heart attack, a stroke, or cancer. If you are diagnosed with any one of these illnesses, the carrier will cut you up a check to up to $2 million while you are still alive, not to your beneficiaries, to you, in your name. Okay? Why is this important to understand? Because according to the Heart Association of America, the average age for one of these illnesses is 43. Okay? We don't know what's in our food anymore, ladies and gentlemen. We don't know what we're putting into our bodies, okay? And these illnesses are definitely coming or hitting our demographics at a very young age. 43, guys, okay, for a heart attack, stroke, or cancer. And also check this, the average age of a bankruptcy is 44. Usually it's to cover the unexpected medical bill. So that's why you can never have too much insurance. You can never have too much coverage to protect you and your family. So what makes MRC different from the rest? Our permanent contract provides living benefits. These riders are free by the carrier. They cover chronic, critical, and terminal illness. Most contracts you have to die to get the money, not with MRC. Let me ask you a question. you most likely will get sick before you die, correct? Well, if you do get sick, do you want the insurance to pay you the money while you're still alive, or do you want the insurance company just to pay you out the money when you pass on? Okay? I myself would love to take the money while I'm sick. Okay? I want to make sure that I know where the money's going. And if I get sick, guys, I can use that money to get treatments in different countries. I go to Canada, I could go to Europe, I could go to Mexico, get stem cell research, maybe something that's not being practiced here in the United States. That's why this insurance money would be great to use somewhere else. Again, what's chronic illness? If you're unable to perform 2 of the 6 active activities of daily living, you can't bathe yourself, can't feed yourself, need assistance with your daily living, that is exactly what chronic illness is. Okay? Again, the carrier will provide a consumer with a check to help with medical costs that health insurance or even long-term care will not cover. Terminal illness. With our products, guys, if the consumer is diagnosed with less than 24 months to live, again, the carrier will cut out a check and to the consumer, up to $2 million. With other carriers, guys, many insurance carriers do have terminal illness riders in their policies, but they have limitations. You might only need 6 months to live or have 12 months to live. And they usually cap you out around $250,000. Not with our carriers here at MRC, guys. You're going to have up to 24 months to live, have $2 million to be paid out, so you can go ahead and party like a rock star. Okay? You may seek medical treatment outside the United States, which in most cases your current health coverage will not cover. Now again, there's other types of permanent life insurance programs, others known as whole life, a VUL, variable universal life, which is known as a UL, or the one I'm talking about today, which is my all-time favorite, is the IUL, the Index Universal Life. Hopefully this segment covered a lot about what permanent coverage covers, its pros, its cons. For more information, contact a local MRC office. We have over 40 locations nationwide to serve you. Again, our corporate number is at the bottom of the screen to set up an appointment, or get together with the MRC agent that sends you this video. See you next time. Make the right choice with your money. I'm your host, Hector Guizar. Till next time.